I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk, and we're finishing this year's trade with a bang, specifically in the grain markets. But before we get into that, I wanted to remind you guys again that we did start a new Facebook group called Ag Chat Without the BS for hedgers and traders. And again, we know that there are other agricultural Facebook groups out there, but we think they've become a little bit oversaturated and don't provide a lot of good content or valuable content to its members. So this is a good place to interact, bounce ideas off of the community, as well as use it as a news feed as we're updating it throughout the day with different information as it crosses our news wires. We provide it to you. So something to touch base on there. So that is that. Without further ado, let's kind of get into things. Soybeans a half a cent away from beans in the teens. $12.99.5 was the high for the March contract. I imagine we eclipsed that psychologically significant $13 handle in the overnight session. How much more upside is left continues to be the gazillion dollar question. Unfortunately, we don't have a good answer for you, but this kind of goes back to what we've been saying over the last couple months, is this type of environment where you're making new highs after new highs, finding technical resistance in uncharted territory becomes more or less a fool's errand. So we're not in the business of doing that. This has been a great momentum trade. We are getting a little bit overcooked on the RSI, reaching some of these levels that we saw back in November and September. We aren't quite there, so maybe there's a little bit more upside, but there is also significant risk to the downside in the very near term as well. They get the strikes in Argentina figured out. That could be a catalyst, or just plain money flow. If a fund starts to exit some positions, that could start to feed on itself as well. I mean, heck, we traded 53.25 cents off at today's low. So with big up moves comes potentially big down moves too. So tread lightly if you're a producer. We've been working with a lot of our clients on the hedging side and continuing to make some cash sales. If you want more upside, we can discuss some different option strategies to implement on that. And all in all, the same can be said with corn. We got this move above the wedge and broke out above these resistance, and now it's just a big squeeze. And corn, I think today was the 12th consecutive session of a higher close. We haven't seen a move like that in over a decade, I believe, is the statistic. We've got the RSI at levels that we haven't seen since 2012, and we all remember that big rally. In this type of environment, sure, we could continue higher, but it's starting to feel an awful lot like if the bottom was falling out, where you just get that squeezing feeling. It's kind of what we're getting here in corn. Again, I'm not calling a top. If you've ever heard me talk or read my morning reports, tops and bottoms are a process, not necessarily a point, but it certainly feels like that squeeze and that peak panic and capitulation could potentially be around the corner, at least for the very near term. The path of least resistance has and it is still higher, but tread lightly. As you see a rally like this, there is risk of a pullback, and we often look for pullbacks to retrace breakout points, which puts us a little closer to 440. So something to keep a very close eye on. Manage your risk appropriately. If you're long and strong, good for you. Just be sure you're protecting the profits going forward. Now, moving over to the livestock side of things, we've got February live cattle. Gave back some ground today after failing against the top end of the 4-month range going back to September and August. Now we're kind of retracing this previous trend line that we broke out of. That's going to be a big area. If we break down below here, potentially there's some more room to work lower towards that 112 level. Keeping a close eye on the cash market. What I have here is what could be considered an inverse head and shoulders. If you squint, you can see it. And again, technical analysis is certainly an art, not necessarily a science. So if the bulls can defend this trend line here, and maybe we pull back here and defend that, I think this is a buying opportunity. If we pull back down here, not necessarily in the February contract, but I think you looked at those deferreds, because if we get out above this resistance line here, 116.50, there is quite a bit of daylight and potentially a retest of the contract highs. Again, February, you're going to be fighting with the clock a little bit. You might want to look out to the deferreds. As I've mentioned in our morning reports that we send out, the livestock sector is really one of the only commodity sectors that hasn't gotten that huge ramp higher. We've seen everything else from stocks to gold, silver, grains just skyrocket higher on the weakness of the U.S. dollar and fears of inflation, but we haven't gotten that in livestock, so potentially they're next. But we want to see technical hold on the support side and ideally a breakout eventually, but again, we're going to be looking out the deferred contracts to try to capitalize on that as we look into 2021. Wrapping things up with the lean hog, same thing can be said. Livestock as a whole has not gotten that bid. Potentially, they can get that bid here as we look to turn the calendar over into a new year. For the most part, we've been range bound, call it 64 to 68, give or take, right here at 66. Not a whole lot to do. As we mentioned in our morning report this morning, we do think that there is potential upside here, but we need to get a conviction close out above technical resistance to kind of get this train and this ball rolling in the right direction. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.